Good morning, traders. Good morning, traders. Today we want to discuss how to mix breakout trading with Fibonacci patterns. How to mix breakout trading with Fibonacci patterns. All right. Now, when we are talking about breakout trading, we are talking about price breaking above a resistance levels and finding a support. All right. So when we have a key resistance level and the price manages to break above that resistance level and gain a support, that's a valid breakout. All right. Now, when we are talking about Fibonacci patterns, we are talking about what some traders call harmonic patterns. We have the Gartley pattern, we have the bat pattern, we have the butterfly pattern, all right, and we have the crab pattern. Those are Fibonacci patterns. Now, how do we mix, all right, or combine, breakout trading with Fibonacci patterns, all right? So a lot of traders know about Fibonacci pattern. They can recognize the Fibonacci pattern, but there is something else that we can do with those Fibonacci pattern. We can look for excellent breakout taking place when the pattern is developing, all right? So it's not when the pattern is completed, all right? Though there is a breakout that can take place when the pattern is completed, but the first breakout trading opportunity that we are looking for is at point B, B for Bravo, when the pattern is developing, all right? So here I have a Fibonacci pattern. So the first condition, which my recommendation to traders when they are trading Fibonacci pattern, because I've watched some video on YouTube and sometimes I see people talking about Fibonacci pattern. Though the things looks like a Fibonacci pattern, those patterns are not taking place at the right place. So what I've been saying to traders, whenever we hear the word pattern, the first thing that should come into our mind, the location. Where does the pattern form? Very important. Otherwise, you'll be trading something else that is not the real pattern. So the first condition for the Fibonacci pattern, especially the bearish Fibonacci pattern, all right, is we want to see a bullish trend and then a pullback that is not canceling, that is not going to the beginning of the prior trend. All right, that's very important for us. Followed by the chart pattern that we call A, B, C, D. That is a valid Fibonacci pattern. Bullish trend, correction, and then A, B, C, D. All right. Now, going back to our main topic, the breakout that we are looking for a breakout above the point B. So this one here, we call it X. So if you don't know what I'm talking about now, it means that you need to watch videos at dayprotraders.com about Fibonacci pattern, about the crab pattern, about the butterfly pattern. Go to dayprotraders.com, check videos also there, so you may understand more about what we are doing here. This is point X for X-ray. This is point A for Alpha, point B for Bravo, point C for Charlie, point D for Delta. So the breakout that we are talking about, it will take place above the point B. A lot of traders very often, Fibonacci trader, will miss excellent opportunity or will even fail to capitalize on that breakout. All right. So price goes up, price pull back, forming A, B, C. We know that the BC should retrace the AB between 38.2% and 61.8% Fibonacci retracement level. When we are talking about Fibonacci pattern, we are talking about specific pattern with a specific Fibonacci retracement and ratios. All right. So, but as the financial instrument manages, this is a resistance level because it formed a higher low here. If it manages to break, so if you are buying here, when the pattern is developing, your minimum target is this point here because there's a resistance here. You cannot ignore it. But we want to see if there is usually a breakout after the price breaks above this key resistance level at the point B. Can you see that? So we are looking for break above and retest and turn around above the point B. All right, will you promise me, all right, to remember that? So here we are looking at this chart. Look carefully, my friend. So though I'm making you laugh a bit, I'm quite serious, all right? So the point went up, so that's the first condition, yes or no? And then it pulled back without going to the beginning of the trend. So it stopped here. So, okay? Follow the drill, my friend. All right? If you ask military people, they know what is the drill, all right? Okay? Here it is, okay? Price goes up, price pull back, okay? Now we want the point B. Here it is. Boom. Right there. And then we see the next pullback, it's just a tiny. So this one is a very tiny because it should be between 38.2% and 88.6% Fibonacci retracement level of what? AB. So now you see, price goes up, price pull back, and then we go see this move up. This is what we are looking. We are looking for this higher low. There's also always that higher low here. See, tiny one. Quite tiny, yes or no? All right, feel free to disagree. Is that a higher low? This low and this one here. It's a higher low, yes or no? Okay. So our point B is this one here. Let me show you. Let's make it like a candle, all right? This is point B right here. Does it look like a candle, a flame? All right, so that's point B, all right? They break out, so once the point B, so you see here, when I pull back, we went up from an A, B, C. Now we are expecting the price to slowly but gently going up to reach the point D for delta. All right? That point D for delta, before that, the price must break above this resistance at point B. Here it is, my friend. Can you see it? Now the price breaks above that point B and retests it here. Look at that. Isn't it good for a swing trader or a position trader and a day trader to capitalize on those breakouts that are taking place above the point B? If it is a Gartley pattern, we'll expect the breakout to go up to 78% Fibonacci retracement level of SA. So if you buy above the point B, all right, if it is a Gartley pattern, you will be setting your target at 78% Fibonacci retracement level of SA. All right. If it's a bad pattern, you will be setting your target at 88.6% Fibonacci retracement level of SA after catching the breakout. If it's a butterfly pattern, you'll be laughing and say, all right, it will break above the point X and go to 127, even up to 161.8% Fibonacci extension level of SA. All right? If it's a crab pattern, once it breaks above the point B, you will set your target at 161.8% Fibonacci extension level of SA. Now, after you catch the breakout here, does it mean that the price will definitely reach the target? No. Anything is possible. The economy news, okay, can change the dynamics of the market. That is not because there is a breakout that the price will definitely hit the target. But there is a high chance that it will reach the target. So once you enter the trend using a top-down trading method, because here, you see, this is a trading setup. It's not a signal to buy. Don't just buy. Boom. Like people were doing in the past. Don't do that, okay? Use a top-down trading method. Use a multiple time frame trading method. And trade it gently, all right? Price can change direction anytime and manage the trade like a pro. Don't assume that definitely because there is a retest and there is a breakout, I can forget, I can just relax and come back and collect it. Take charge of the situation, control it, handle it, okay, manage the risk, and here it is going up beautifully. Above the breakout, above the point B, whether it's a Gartley pattern, a butterfly pattern, all right, a bat pattern, all right, or a crab pattern, the breakout that are taking place above the point B are usually, okay, excellent breakout trading setup. This is about how one can mix or combine breakout trading and Fibonacci patterns. So here you can see, if I go a little bit deeper, all right, you can see that the retracement AB, all right, when you can see it's almost, this is a bad pattern that is developing here because the AB retraces the SA up to 78% Fibonacci retracement level. Where is the 78% Fibonacci retracement level? Here it is, that's the line there. You see 78. Am I talking to myself? That's the 78% Fibonacci retracement level. The correct Fibonacci number is 78.6%, but I use all the time 78%. Here it is. So you pull back, you went to 78%. So the first Fibonacci pattern that is coming to our mind when we see the AB retracing the SA by 78% is one butterfly pattern. The butterfly pattern. So at that stage, when we are here catching our gorgeous, beautiful breakout, bullish breakout above the point B, we will be setting our minimum target at this point here, 161.8% Fibonacci retracement level. But the first target is 127. So we will be watching because for the butterfly pattern, there are two targets. The first target is 127. You see how the price went up, and you see they slowed down a bit. Let's zoom into it. First target is 127%. See, they slow it down here because traders, professional traders, know that this is a bad. There's a high chance that we may see a bad pattern. Now, first target is hit here. See, they slowed it down here, price consolidate. Then they say, oh, why don't we bring it to the ultimate target, 161.8%? Here it is. You see this bearish candle here. But now, as the price reaches the target level, this is one more thing I want to say about how to mix breakout trading with Fibonacci pattern. There is, right, a Fibonacci pattern mistake that traders are making all the time. Is that when a price reaches the target level, people want to sell, okay, because if you are participating during the target, the bearish butterfly pattern is completed right here. So people will be, those who were buying before would like to buy, would like to cash out. So for a bullish trader to cash out, he must sell. So there will be a lot of selling activity at the target point, either 161.8% or 161.8% for the butterfly pattern. But be careful. When the pattern is completed, because we are trading the pattern as it was developing, catching a breakout above the point B, sometimes we have a breakout also at a target point when instead of selling, the price breaks above the target level and finds support. So there are two places where we can look for a breakout. The first one, or the safest one, is at above the point B. That's the safest place. The next one is at the target point where the pattern is completed. For the butterfly pattern, between the 127% and 161.8% Fibonacci extension level of SA in this zone. So we will be expecting a bit of pullback that people will sell here that the pattern is completed. But remember that a breakout will take place where, in a resistance zone, in a zone where people are willing to sell, but to the surprise of everybody, the price manages to go above that critical resistance level and find a support. That's what we call a valid breakout. So here, the price did not come down, though it's a target zone. A lot of bearish traders will attempt to sell, so you can see they were trying here, but it didn't. But the price go through it and it breaks the bull. The 161.8% Fibonacci extension level of SA, which is the ultimate target for the butterfly pattern. Breaks a bull, retest on the monthly chart, and that's a bullish breakout trading setup. You see, don't just buy because of the breakout. Use a top-down trading method to trade it. After that, surprise, surprise, my friend, the price continues to go up. I will be recording another video to talk more about Fibonacci pattern trading mistake, and we'll be looking at how one can handle those situations. So two places we can combine or mix breakout trading with Fibonacci pattern, above the point B when the pattern is developing, and also at point D for delta at the point when the pattern is completed. I don't want this video to be too long. All right, if you have any question or suggestion or comment, all right, put in the comment section, and in due course I will be recording another video to answer your specific question. Remember that the breakout trading setup will generate a valid trading signal. It is important for us, if you want to trade like a pro, that we implement a top-down trading method. What we are discussing here, though I'm on a monthly chart, we can look for those patterns on a 2-hour time frame, on an hourly time frame, even on a daily chart, on a 15-minute time frame, on any time frame. But remember that once you use at least 2 time frame, all right, in order to control the risk, all right. We are the STW SYS 008 traders, talking about how to mix breakout trading with Fibonacci patterns. Happy trading to you all, and speak to you soon.